Hello guys, welcome again to another BTC video. I hope you are doing great today. Sorry for this late video. It's actually like 2 a.m. in the morning right now for me, but I've just decided to just do a BTC video for you guys because I'm seeing a lot of price action happening right now, and actually for me it's kind of looking very interesting from a charting perspective with what I'm seeing right now in front of me. So I'm gonna walk you through the micro time frame first, and then I'm gonna jump to the macro time frames, which are the daily, the 3-day, and the weekly. And then we're gonna stick with that. So please stick to the end of the video so you can watch all of the information that I'm gonna share to you. So let's get started with this. So first of all, this is the 1 hour time frame. As you can see, Bitcoin was trading in this parallel channel, upwards parallel channel. It found resistance actually around the 45k region. Now this region was also obviously a previous area of resistance, a diagonal resistance, and as you can see it acted as support, and it acted as resistance currently. So what happened is, or what I was expecting for this move to be basically rallying more to the upside, was a potential holding of this area, which is the 42.6 region, which is this top of the channel basically. And if you watched my previous video, I was talking about this pullback already. I was saying that there will be a pullback, and I'm eyeing two levels. Worst case scenario, we go to around 42.6, and I need this 42.6 to be basically to hold. If it doesn't hold, then this pullback will be more severe, but it's not the end of the world. And I'm going to be explaining why I don't think it's in the end of the world, and I will explain when do I think it's the end of the world basically. So first of all, from a micro perspective, what I can see is two things currently on the charts, on the BTC charts. First of all, the indicators on the 1 hour time frame, which is the micro time frame, are actually very oversold. So you can expect these to start rallying to the upside pretty soon. We are forming some type of bullish divergences as well, as you can see on the squeeze indicator and the volume indicator as well. As you can see here, you are dropping on the 1 hour time frame, but you're also dropping in volume on the 1 hour time frame. So this is a good sign. This is a sign that this rally or this drop is basically getting exhausted. Sellers are getting into that exhaustion mode, but like I said, it could be worse than this. So we could have lowers, and I'm going to be explaining why. So if you take this this move that you're seeing right here as an Elliott wave, from an Elliott wave perspective, you could see that you have a wave 1, a 2, a 3, and now we are in a potential retrace of a 4. Now this is good and this is bad also, and I'm gonna be explaining why this is good and this is bad. So first of all, for the retrace of wave 3, so I'm gonna take my fib extension obviously, and usually not my fib extension, my retracement. So usually we retrace here at least to the 0.382. So let me reverse these slightly. So we retrace usually to the 0.382, which we did actually, perfect retrace from an Elliott wave perspective. Wave 4, this is where it usually goes to that area between 0.382 to 0.41. So you can still expect 41.460 to be tapped as well. With that said, if we do lose this region, next area to bounce would be around the 0.5. Now, usually wave 4s don't retrace that much. They don't go to the 0.5 region, but it's still a legit Elliott wave if they do. Personally, like I said, I would like at least a bounce on the channel to happen, on the heartland of the channel to happen, which is going to be around 41.6, which is obviously near the 0.4 retracement level. But and that obviously will avoid further drop to the downside, because if we do lose this channel, this heartline on this channel, we're gonna go retest the bottom. Now the bottom is not bad as well. The bottom is coming in around $40,000 right now, $40,100, give or take. And on the daily, that's actually 1 EMA as well there. So I think it's the 20 EMA or the 10 EMA. I'm not sure. I will check it when we go to the daily time frame. Now the good thing about this is, after this wave is finalized, so I'm gonna assume it's gonna finalize on the heartline of the channel, because most likely this is where it's gonna tap around 41.8, 41.9. What happens next is a wave 5. Now usually wave 5 is going to be an extension of 1, a 1-to-1 extension of 1. So if you're gonna take your wave 1 basically and you extend it to your wave 4, and you see where your one level will be, it's going to be your 47.6. And I still think this is going to be the case. I still think this is how this is going to play out on the micro time frame. Obviously, the confirmation will come with a break of 45K, definitely. But obviously, some people will say, oh, yeah, 45K, obviously it's going to go to 47. Well, there is another key level that I think if it does break, we do head to 47 as well, which is a 3-day candle close around 43,800. So anything about a 3-day candle close that is above 43,800 will most likely give you a break of this area and a tap of the 47 region. Now, if this wave 4 basically drops to the bottom of the channel, so if you lose your heart line, so your wave 5 will also drop as well, and it's also going to be a 1-to-1. So you're going to take your extension again. So this is your trend fib extension of wave 1, and then you're going to pull it to wave 4, and then you're going to see that your wave 1 will go again to that one region, which is around 45,700, which is like that. And this is going to give us like a triple top scenario on the higher time frames, which is obviously very bad, or a double top scenario right here on the small time frames, which is also very bad, because after this wave 5 is finalized, it's going to be followed by an ABC correction. Now, this ABC correction, depending whether if we make a higher low or a lower low, will give us more clarity on the next move. But till now, I cannot be too certain. So that is what I see on the micro time frames. I'm going to just pop around to the 4-hour time frame just to see if anything's changing on the 4-hour. So on the 4-hour, this correction still is not over, by the way. It's seemingly still going, but the micro time frames could flip it. Like I said, the worst case scenario is this to go to the bottom of the channel, and that bottom of the channel will be around $40,000. So 40,600, 40,500, around that area, which is not very good, because it will give us a double top scenario, I assume, on our Elliott waves, on our micro Elliott waves. Now, let me just check one more thing, which is the 6-hour time frame. Obviously, the 6 hour is also bearish, looking very bearish. Indicators are bearish. You have a potential bearish MACD cross. Now, the positive, the daily. So let me jump to the daily and explain what I see on the daily. So on the daily time frame, from an indicator perspective, things are looking okay. You're still bullish on the RSI. So this is not the end of the world. Okay, you're still bullish on the PVT. So again, not the end of the world. You still are bullish on the MACD, even though you are, or I think what we are experiencing right now is a bearish divergence on the daily time frame, because not the bearish divergence, exaggerated, which means a weak divergence, because as you can see on the MACD indicator, you had a high and a lower high like this, and on the price action you have kind of similar highs. So this is called an exaggerated divergence, which means just a weak divergence, and I think that's why we're having the pullback basically. But yeah, let me explain what I see as well. So two things that I want to give you like a small pointer on. Usually the squeeze indicator, before it flips to green and gives us more rally to the upside, it usually has a drop. It happens like 90% of the time. I'm just gonna show you here just a few, and you have to remember, trading and analysis is just pattern formations on a chart happening over and over again. So as you can see, for example, here around this area, you can see we had a drop. Just when we were about to flip to green, we had a drop. We flipped to green, and then we had a mega pump, basically. And this happens most of the time. I'm not going to say all of the time, but most of the time. So here you were red, you're about to flip green, and you can see you were daily green, and then red candle, 2 red candles in a row. Now, granted, like I said, it depends. We can have something like this, but that's what usually happens from a squeeze indicator perspective. Usually you drop, and then you either rally to the upside or consolidate. If you consolidate, well, we expect rally to the upside after this drop, basically, on the squeeze indicator. If you consolidate, then the consolidation rule will play out, which basically will tell you that you are bullish on your indicators, but the price is staying stable, so most likely a drop will follow. So the daily is looking not bad yet. especially that your stochastic RSI still hasn't dropped below 80. If your stochastic RSI drops below 80, it's not the end of the world till you lose 50 stochastic. So if you lose 50 stochastic, then most likely you're going to go to the low 20s and break those 20s and basically enter a bearish mode, where basically this double top scenario that you see here in front of you will most likely play out, as you can see. Now the target for the double top is very, very ugly, and the neckline is very, very good. So the neckline is going to be $35,460, and if the neckline does break of this double top scenario, so conservatively, let me just remove this. Conservatively, I will put a target of like around $26,000, $27,000 if this double top scenario plays out with confirmation of break. But again, the neckline is 35. So if 35 breaks, then most likely on the next 35 tap, we will drop. And this is what the market likes to do, by the way. Support, long support, oh, another support, long support, oh, another, and then bam, you get a drop. So it kind of fools people into, or traders into, believing that this area is a strong area of support by giving them a few extra winning trades. And then on the last trade, a trader enters with confidence, ups the money, you know, psychologically, you up your money from $1,000 position to like a $10,000 position, and that's where you get liquidated, and that's how the market basically gets that liquidity from you and hunts you down. So it happens all of the time, most of the time. But there is some good news, and I'm gonna go to the 3-day chart to show you what is the good news. The good news is that on the 3-day chart, you are about to cross bullish on your stochastic RSI. You are green on your squeeze indicator, so this means that you are in a buying type of situation, buying mode, or an upwards mode. Now, when will this be confirmed, and when will this allow us to have a rally to 47? I think only when the stochastic RSI crosses above this 80 level with both signal line and stochastic line. If that happens, if you have this cross on the 3-day chart, so this 3-day candle closes in 20 hours. So if this 3-day candle is able to cross these stochastic and signal lines bullishly above 80, then you will potentially have your rally to the upside towards 47. So this is a good thing. Now, obviously, there is a bad thing about this. If you do cross bullish, and if you do break this 80 level on your stochastic, but the price consolidates, then that's a shorting scenario 100%, because obviously a shorting scenario on the 3-day, which will take around 2 weeks to finalize. But it is a shorting scenario because if you know me, and if you follow with me on Twitter, you are on my Discord, or my trading student, or my TA student, you know that I like to usually short the green, long the red. It's not as simple as that, but that's the usual concept. You know, that's the usual concept of it. And once this is green, it's basically like a sell signal, but it needs to be finalized. The green needs to be finalized, and we need confirmation from other indicators to take a short signal, because you can see taking a short signal, for example, at this area was very, very bad, but taking it here around this region was very, very good. So obviously there is keys and tricks to this, but this is what I see positive about the 3-day chart. Now the weekly chart obviously still hasn't given us a proper rally to the upside, but like I told you earlier, this is heading towards a cross above 50 RSI, which potentially might give us that push to the upside. And you can see our trend line as also here on the weekly time frame can go to these levels that we spoke of. It can go, but obviously I'm not going to say now it will go, because there's no confirmation of any break. And as I said to you earlier in my previous YouTube video, if this region, which is this orange box right here, doesn't break, if you don't have a 3-day candle close above 43,800, if you don't break $45,000, you're not going to see $47,000. Not to mention, you have your weekly EMAs obviously catching up to us, your 18 and 30, and this is where the rejections are happening all the time, around the 18 and 30. But I think the market, obviously because traders like myself know this, I think the market will give us a small liquidation pump before a drop, and that's what I'm betting on, hopefully. But obviously you don't take my word for it, you just follow my indications and my indicators and my rules. 3-day close above 43,800, most likely you will see those higher 47 regions. If you don't and you lose your EMAs and you lose the golden pocket on the micro time frames like you said here, then the heartline, sorry, of this parallel channel, then most likely you will go here, form an Elliott wave 1, 2, 3, 4 that goes to the 45 region, give us a double top scenario, another break. So it's getting interesting for BTC. I don't want you to follow the Twitter people out there. Trust me, none of them know what they're saying or doing. They're just following the trend. They see an impulsive wave, they call moon. They see a corrective wave, they say bear. It's all waves. Markets are waves. We move in waves all the time. And as long as you understand that there's an impulsive wave followed by a corrective wave, impulsive wave followed by a corrective wave, then you will start to understand how trading kind of works, obviously. So yeah, this is my analysis right now for at least the micro time frame. Just to summarize quickly for you, the 3-day time frame for me is looking kind of bullish. A stochastic cross above 80 is what I want for it to happen, to confirm that bullishness. If that stochastic cross doesn't happen above 80 and we get rejected here, then we'll most likely fall. And obviously be careful, because once this squeeze indicator on the 3-day kind of finalizes, this is another short signal just waiting to happen. Daily time frame is actually bullish. Like I said, I want this stochastic RSI to hold above 80, and then if it does and it's able to do so, then most likely, obviously, we will see those higher 47s. If not, and we lose 80, last line in the side is going to last line in the sand will be 50 stochastic. Lose 50 stochastic, I think the double top scenario will happen, and we're gonna go to 35 and break it. So on the micro time frames, we are forming an Elliott wave formation. Obviously, like I said, we have a 1, 2, 3, 4, 5 Elliott wave formation. Where's my Elliott wave? Sorry, it's like 2 a.m. in the morning here. So we have a 1, 2, 3, 4, 5 Elliott wave formation. Where this Elliott wave will stop, no one can be for sure, but currently it is sitting at the key level, at the important level. And after that key level is hit, and after that pullback is finalized, we'll be able to see wave 5. If we are able to hold the heart line, which is around $41,700, if that can hold, then we will see an Elliott wave 5 that will go to 47,000. If that doesn't hold and we will go to the lower end of the channel, which is around $40,000, $40,500, and then your Elliott wave formation 5 will most likely give us a double top scenario with the ABC formation, ABC, so something along those lines. Now, where this C will go, again, I can't know till I find data, till I get the A move at least. I need the A wave first, and then I can know where B wave goes and where C wave will potentially head. If C wave gives us a higher low, so something like this, so basically we're still bullish because we're still making higher lows, then everything is okay. But if C wave goes below the previous wave, which is around 39.6, then this is very bad, because this is a lower low, which is indicating a reversal of trend, basically. So you're moving from bullish to bearish. So yeah, that is my analysis for today, guys. Don't be scared yet. Obviously, we are in a bear market. I called this like a month and a half ago or 2 months ago. But it is what it is. Accumulate, and you just remember, bear markets is where people get rich. We don't get rich in bull markets. We get rich in bear markets by buying super lows. Thank you again for watching the video. I hope you enjoy your weeks and your weekends with your family, and I will see you again next time. Bye-bye, guys.